action.
Hey guys, welcome back to this channel. In this channel topic.
In this video, we're talking about.
You go.
In this video, we're answering some Q&A. It relates to saving, budgeting, how to tackle your debts,
Money.
or investment.
Please note that we are not financial advice. By all means, this is based on our own personal experience, how we go about tackling things when it comes to money.
Yeah, first question. So last week, I paid out my car loan due to the fact that I couldn't borrow enough to buy my own home. Oh, it was hard to part with that much money, but now I saved that $115 per week and it's going straight back into the home deposit account. So this time next year, I can look for a home again. Very excited. Excellent.
I think that's a good news in the sense of people that have that massive, I guess the biggest consumer debt would be car loan. Car for guys, I guess, maybe girls,
credit card loan,
and credit card. Those are the two main consumer debt. Just because you can have that items now, sometimes it's sort of like backpedal you. You can't borrow money. They're not the only one. We had to close our credit card. Our brokers tell us to do it. There must be a reason why a broker tell us to do that.
We didn't have any debt.
We didn't have any consumer debt.
It's just available. But the banks, when they lend you money, they see how much you can borrow, and that's the chance that you use that credit
card,
and you cannot afford to pay for your mortgage. So that's how they see it.
I think they had a formula of for every like $1,000 that you borrowed, that means your home loan can be will be reduced by X amount of dollars.
Yes.
Don't know what that would be, but
each bank's
different.
Yeah.
But this kind of show you in a sense of the less consumer debt you have, including car loan or any personal loan, the better it is for you in the long time to be able to get a mortgage.
Yeah, I think it's better off you pay off your car first.
Yep. So next one. Hi, I'm after some, I guess, advice on or if not from a personal experience. Got $25,000 in my saving, but I have $25,000 worth of debt. 2 credit cards, personal loan, and I don't know what that is. Currently, that's to save a house in which we're hoping to go to the bank in the next 3 to 6 months to build. Should we get a consolidation loan to pay it out with a saving, or start saving again? Ooh, you've got $25,000 in saving. You've also got $25,000 worth of debt. What would you do?
Pay off the debt first. No question.
Your reason?
Because your interest paying to your debt is higher than the money you save in your bank. So
with the consumer debt, I think is let's say, argument's sake of 10% is that you have to pay interest on. So that $25,000 consumer debt with the 10% interest, the bank or whoever you borrow from, they're earning money from that $25,000. So that $25,000 can go $30,000-$40,000 in the long term. Yeah. Whereas if you just demolish that quickly now, you can start saving
again faster
quickly, and that way you don't have to pay that consumer debt. I do the same thing. I would pay that off as quickly as possible. The less consumer debt, the
seems
better.
like that's a common question. Very common question. Why people having this emotional attached of not paying off the loan, not the loan, the debt?
The consumer debt.
Yeah, why?
Consumer debt is not a big thing, a big favor. If you can't afford it, don't buy it.
Yeah.
If you can buy it, buy it in cash. Don't buy it on credit. If you buy it in credit, you'll be paying more
than what your retail price is.
Correct. So you think it's a good value, but it's not. Next one. Hi guys, I just want to ask where everyone putting their saving account. Is it to an ING?
Yeah.
Or have you opened another bank account elsewhere? We have multiple different accounts. One of them is
Macquarie.
The other one is
Ubank.
Is there
and I got no interest ANZ.
No interest ANZ.
Yeah. Bank West, no
Bank
interest.
West, no interest.
We have so many banks.
We
you have Westpac.
I got Westpac.
Yeah.
So we diversify it so that way we don't just stuck in one location in case if that one is not performing.
No, is not well. Saving, yes. Saving account, we do go everywhere. We shop around all the time. Whichever provide us the best interest, we go there.
Whoever's giving us provide us a lot more interest.
Correct.
Then we go there, and
Yep.
we'll sort of mix it up.
Yeah, just Google it. They
So,
will answer you. We
Actually,
change all the time.
what is the current? This is the next one. Currently with ING is 1.8%. What is that?
What is that it? Macquarie, I'm for a 2.5, I think.
That's at the time that this is
2.5,
being recorded.
But it's only for four
4
months.
So short
Once
term.
changed.
That's what I meant by like we
Change
mixed
all the
it.
time.
Like we whoever's giving us
I
no
don't have
loyalty. Whoever's giving us the most money, we go there.
Yep. Yep.
So, all right. My husband and I are looking for buying our first home. Just wondering if anyone had recommendation and which bank was best for a home loan. No loyalty.
This topic of this video is no loyalty.
No
worry.
loyalty.
No. Just do whichever bank borrow you money.
Get the biggest amount as well as that lowest
Lowest
interest
interest,
when it
exactly.
comes to a home loan.
Correct.
Like pay the lowest amount, but the biggest, depending, like yeah.
Well, but if you pay a bigger mortgage, which means bigger repayment, you're gonna go.
Correct.
Anyway,
So
just
whatever
do
you-
whatever you can afford.
Yeah, if you can afford X amount of dollars, then go for that dollar figure and shop around whoever's can provide you with the lowest interest rate.
Correct.
So we use a broker, that helps a lot.
Mm-hmm.
That way it minimizes you going to door knocking on one bank to another. That way, because each bank have their own lending criteria, let's say, depending on your circumstances. So,
What is it, the question? Okay. Well, this person just asking, what is your rough mortgage? So what's your mortgage? Fun in our 30s, mortgage is around $400,000.
that's for one property, I'm hoping.
Yeah, one.
Okay, gotcha. That's about right.
Yeah, depends on how much is your property worth.
Like, is it it doesn't really classify. Is this an investment property or principal place of home property?
I don't know.
So that's a little bit of.
Well, our mortgage, that's the question. So our
So-
mortgage, we sold one, so that will be less.
About 600.
Yeah, around
700?
650.
But that's
650.
multiple
In
property.
3 properties.
Yeah, 650 and
Yeah.
3 properties
Yeah.
each. I mean,
Yeah.
and the
We're
rest
at
more.
our 30s. Yes, that's it. That's the answer.
Yeah, we're in our 30s, but we also hold other properties.
Not in our name.
Fluctuate.
Yeah.
So, okay, here we go. I'm 50. Investment property is $2,000. Okay, so I'm 50 years old. Investment property, paying about $2,000 per month. However, $1,800 is covered by tenant. So that's $200
Out of pocket.
out of pocket. So negative cash flow of $200 per month. We are renting a $3,000 per month. Superannuation is low for our age due to life circumstances. Question: should we put more money into our investment property, or to reduce our mortgage and increase equity, or put money into super?
We talk about that.
I
all the
can't
time.
really say much
can't.
considering we are on our 30s. So we're in 30s, so we're about 20 years younger.
I don't know. Because we always talk about super as well. We're not big fan about super, but if I were them, if I'm at that age, if I'm still working full time paying tax, I will put the money in super.
Yeah?
Yes.
Okay, gotcha.
Because you're not asking why.
Why?
Because at least if you're working and you're paying tax, and that money you still get tax back a little bit, but if you put in super, you're getting older, and the money you sacrifice or you put it in super is tax free.
I'll say 50-50.
I'm not accountant, I'm not financial supervisor, so I cannot, and I don't know your situation. But
Yeah.
if I'm in your shoes, I will put it in super.
Yeah? Okay.
Yes. 100%.
Gotcha.
You 50-50 because you don't know. You don't know.
Well, that's the thing. I don't. We're not a big fan of super. We'd rather have a lot more control. With property, can provide that a lot more.
And we do our own investment. We
Correct.
control it.
We control our own destiny with our investment property. So I think that's the reason why I'm a lot more into property instead of super. Like each to their own.
Yeah.
Right. But yeah, definitely. If I would fast forward 20 years, and where we at. I would probably do the 50-50. When you don't know, split it.
Yes. Okay, last one.
Looking buying a house next year, only have about $4,000 on credit card.
Oh, that's the debt.
That's a
debt.
credit card debt of $4,000.
Is it only debt? Okay, that's the only
That's
debt.
pretty good
Yeah.
for $4,000. Okay. Do lenders prefer have no debt at all, or need to keep the credit card as some sort of a line of credit for credit score? Zero credit card, the better it is.
Oh, just keep one if you can. Pay it off the debt.
But pay off the $4,000. But if you have and maybe just instead of having that $4,000, change it into two, like half your line of credit into $2,000 or $1,000 even. Because we got told that by our broker. Close it. Reduce
Just leave one, whatever.
Yes,
you
make
use.
it small, make
Yeah.
it very small and small as possible.
Yeah.
Should I pay it off and close it? Yeah, I would do that. I'll reduce it to pay off. Oh, there you go, to $2,000. So I would reduce the limit to at least 2 or 1.
No, she's asking a question. Should I
Okay.
pay it out and close it, or pay half? Your favorite, 50%.
50-50, yeah.
So should I pay $4,000 and close the credit card, or pay $2,000 and leave the $2,000 in there? But the thing is, not currently using it for any purchase anyway, and your interest rate for that is 6.99%.
So
Close,
that's 7%.
not close it. Pay it off for $4,000 off.
Pay it off.
7%. You're willing to pay. You're willing to
Just
pay
to have that.
7%. Pay it off 100%, 110%.
I'll close that. Close it.
You don't have to close it. You can
But
reduce
you're paying
your limit.
7%. Yeah, reduce your limit
Yeah,
to like.
it's pretty low for
50%.
credit card, yes, but still 7%. And how much can you save?
Exactly. Like if you just want it just in case of emergency, like $1,000 probably enough.
Yeah.
Maybe and just inject your in case emergency money into like your saving account and use that if you really if you can. So should we do this last one?
Okay.
Okay, cool. How does everyone find the investment property? Does anyone use a buyer's agent? And are they recommended? Is it worth their charges? Your turn.
I thought we answered that before.
We have
Very
answered
similar.
beforehand, but similar thing. But it's another question. A similar
Depends
question.
on your time. If you don't have time and you have the money, yes, use them. But
if you don't have the time,
if you
but
don't
you
have the time,
have
you have
the
the money, yes.
Okay,
Because
so
you pay for the time.
yeah,
You
pretty
pay
much
for the time for education yourself, and doing research and getting accountant, solicitor is daunting because it is quite a lot of money when you buy a property. And if you don't trust yourself on learning, use them.
Yeah.
But if I can redo it again, no, I won't use them. We used 3 times.
All right. Yeah, we use personally we have
Yeah.
purchased 3 properties with
2 agents.
2 different buyers agent. If we do it again, no, we won't.
No.
I would rather do it ourselves. The learning curve from that is a lot. What else is there? Is it really worth it? If you
Still
haven't done it
depends on-
beforehand, then it probably is. But for us, we've done a lot of quite multiple transaction. We wouldn't do it again.
Yeah, if you just want to put your money somewhere, you don't care about learning or not, then yes, use them.
Yeah.
But if you want to learn more about property and that's your long-term or future goal or education for passive income, do it yourself.
Yeah, definitely. Like I guess we were at that stage where we were working full time. We didn't have enough time for ourselves,
Yes.
so we used professional to do it
Yes.
for us.
Yes.
But now, like now,
I think because now we have the time.
yeah, now it's the
Now
other way
we have the
around.
time.
We have the time,
Yeah.
and like okay, so
Yeah.
So
If
we're-
you don't have time, yeah, maybe good idea. Yes.
Anyway, so if you have any questions, guys, by all means, send it to us. Please note though that this is based on our personal experience, based on our data. We're not accountant, we're not
Financial
advisors. So by all means, this is just our journey on how we do things. Hopefully this guys can help, or hopefully this can help you guys to make your decision.
See you next time.
Cheers, bye.
Bye bye.